You take a look at this chart on the Bloomberg terminal, you can see growth obviously has been outperforming due to the pandemic. We saw this yesterday, Zoom, Peloton, all these stay-at-home shares just skyrocketing. Does value have legs to run?
We don't think the environment is favorable for value stocks. Yes, I think, if you look at the circumstances favoring value, you need a very strong economy, like more evidence of that strengthening. We're in a recovery phase, but nowhere near the kind of strong growth that would support value stocks. I mean, we saw yesterday the jobless claims numbers are still quite high. So I think the economic environment wouldn't be supportive of that. And of course, interest rate is a very important driver for value stocks. And I think that structurally and secularly speaking, we're going to be stuck in a very low interest rate environment, not just US, but globally. And I think that environment will still be very beneficial to growth stock. And that's why you're still seeing so much inflows and retail investors' interest in these growth stocks. So I don't think that value is going to outperform growth anytime soon.
You're also overweight U.S. equities, although the stock 600 has outperformed the S&P 500 on a price-to-book ratio. Why so then?
Yeah, so I think, we have actually increased our UK equity exposure earlier in the month because we see that there has been some progress on the European economy. So actually, on a short-term basis, it may actually outperform the US. And secondly, I think that the euro has been stronger. So after the recovery fund has been approved, I think there is more investors' interest in this region because it shows that there is a fiscal commitment in the region. And that fund is actually going to be used for a prolonged period of time, not just the near term. So there's some support for that structural growth story in the area. And of course, because we're in a nascent global recovery and European stocks are generally more exposed to that cycle, and especially China, where growth is now a bright spot, and Europe is just more exposed in terms of exports to China. So I think all these reasons have led to more interest from international investors.
I also want to ask you about inflation, Janet. Expectations are rising. If you look at the break-evens, that's one metric. But the Fed, in their minutes, they actually talked about the worry of disinflation. Is it too premature to have this inflation debate?
Yeah, I think it is a bit too premature. We are not worried about the inflation dynamics in the short term, although you do see that the recent inflation data in the US and the UK has been picking up. But that's really because of the base effects of the oil prices. I think it is worth having that discussion because ultimately speaking, if you're long-term investors, you do have to make your plans regarding that. So we think longer term, inflation could emerge as a problem because we have so much money being thrown into the system, trillions and trillions of dollars, and we have unprecedented fiscal stimulus, and together that synchronized stimulus is going to be quite inflationary in the longer term. But because we still have such a big output gap, we're in this difficult economic situation that is not going to manifest itself in the next 1 or 2 years. So we're looking further down the line. And I think as long-term investors, that's why you see more people going into gold as inflation hedge, for example, into inflation-linked bonds. These are signs that people are planning ahead for the future, not like necessarily caring about the risk of inflation in the near term.
I know some people may roll their eyes at this statement, but is it possible right now to start worrying about stagflation if we have higher inflation? But look at these unemployment numbers out of the United States. Again, yesterday, we saw them tick higher. The economic recovery is obviously going to be bumpy.
Yeah, I mean, in a worst-case scenario where the economy has some more permanent degree of scarring, then stagflation could be an issue. But, we're still in a nascent recovery, and the data can still be quite fluctuating. I mean, people focus a lot on the initial jobless claims. I mean, it is quite disappointing to see that it's up back above 1 million. But these are weekly data. So, if you take a 3 to 6 month view, what we think is that the economy is still on a recovery phase, and we think that the third quarter or fourth quarter U.S. GDP should be strengthening in double digits. So it is too early to be too pessimistic for now, because you're simply looking at this initial jobless claims data. There's still a lot of improvement in the data that is encouraging. For example, the U.S. retail sales is already back to pre-COVID level. That kind of data. I mean, so I think it is a bit pessimistic view to think we're going to be in a stagflation environment.